Hello everyone and welcome back to the channel. Guys, in this short video I'm just going to explain for all of you that are part of our Discord group that ask me how to set up the credit spread, in other words the vertical spreads on a trading platform. Okay, I'm going to use here the Tastyworks or Taste Trade platform because that's the one that I mainly trade options, but you can also replicate these on any other broker that you might have. I very doubt that your brokers doesn't have something like this pre-made strategy that you can just click a button and it can formulate for you. But in a nutshell, the credit spreads are very simple. Okay, we are either going to buy one leg above and sell one below, or buy one below and sell one leg above. I'll explain to you guys in a nutshell here. Okay, but the first thing we're gonna do, we're gonna pick our DTEs, and then when you pick our DTEs, we are just going to pick our strike price. Okay, so in this case here, let's say for example we're gonna choose here our 39 DTE, which is going to expire on 20th of December 2024. The first one that we're going to build, it is the short vertical spread on the put side. So what you're gonna do is we're gonna come here and we're gonna sell one here and you're gonna buy one below. Why? To define the risk here with whatever the width of this true strike price might be. If it is $5, our maximum loss is going to be 500 minus the premium we're going to collect. Okay, very simple. So in this case here, we're going to sell here the 20 delta, which it is 227 strike price, and then we're going to buy, let's say, 5 points below the 222 strike price, which it is roughly between 130 and 127 bid. Okay, so in this case here we bought the we sold the 227 and we bought the 222. As you guys can see here, we have a $5 wide spread. So our loss here it is our $5 minus this thing here that we're going to collect, and that's why our maximum loss is 434. So basically $5 minus 66 cents, which it is equals to 434. Of course, multiply that by our option multiplier, which it is $100. So the maximum loss of a short put vertical spreads, it's always going to be the width minus the premium. Okay, that's the maximum loss because this is capped. So you start to lose when the stock start to reach the $222. Okay, this is your cap because this is the chart. You go here, this is the market price right now. You have your 227 and your 225. Anything below here, you pretty much capped here at your loss. That's the way it is. You cannot lose more below the 222. This is the short one. The long one is very simple. We're gonna swap here. We're gonna buy the 227 and sell the 222. As you guys can see, we are going to pay 66 cents. This will be our maximum loss, and the maximum loss, it is the inverse of the short put spread, which it is in this case here the premium that we're going to pay to go long in this spread. Then of course our maximum gain is going to be the width minus the premium that we paying, which is 66 cents. Our maximum profit is 434, which was the maximum loss of the seller of the vertical spread. Very simple. Of course, when it comes to the long call, this is the market price right now. If we're gonna sell here short call vertical spread, we're gonna sell one here close to the market and we're going to buy one here above. In this case again, as you guys can see, $5 wide, we're gonna receive 59 cents, and then our loss gonna be again the width minus the premium. So that's why we get the 441 maximum loss if the stock start to trade above $265. Same thing again if we do the opposite here. If we buy this long call vertical spread, we're gonna pay 59 cents for open this trade, and this will be our maximum loss. And of course our maximum PNL is gonna be also the width minus the premium, which was the maximum loss of the short call vertical spread. Very simple. And of course sometimes what people do is they come here, they sell one here and then buy one here. Okay, the other way around here, and they turn this into an iron condor, which it is a short put vertical spread plus a short call vertical spread. So you got two legs here. Okay, and of course, right, it's something like this. Okay, as you guys, actually, let me delete this thing here. The PNL will be something like this. right? This is your PNL. This is your short call, long call, short put, long put. Okay, this is your maximum loss, this is your maximum loss, and this is your PNL will be capped here with the premium that you're going to receive to open this trade. But this is, in a nutshell, how you open your vertical spread, both on the call side and at the put side. Remember, the maximum gain of a short vertical spread seller, it is equals to the premium, and the maximum loss, it is the width minus the spread. This is the seller, okay? This is the seller. The buyer, the maximum loss, it is the premium that the person is going to pay to open the trade, and the maximum, okay, gain, okay, it is the width minus the premium that you're going to pay. So as you guys can see, is the opposite one from each other. Very, very simple. It is a defined risk strategy, but again, I'm not talking about here how to enter, how to manage, how to close, because I will put another video explaining to you guys the way I trade this, because when it comes to vertical spread, guys, it is basically like 3 to 5% of all my trades that I do trade. From last year when I made almost $500,000, this was pretty much roughly 2% of all the trades that I did. Why? Because it's very, very rare that we do have the chance to open a vertical spreads. If you do this thing here on a weekly basis, things like that you think you're gonna do a mechanical thing here, I'm sorry, that ain't gonna work. That ain't gonna work, because it is one of the worst strategies ever when it comes to trade management. You can close before, you can manage when you reach your short strike, you can do whatever you like, but if it goes in the money, deep in the money, see you later, alligator. That is a full loss. And the risk to reward here is something between 1 to 9, 1 to 7, 1 to 5, or you can do 1 to 2. Of course, you're gonna get close your trades pretty much 80%. So you need to know when, and those times are very rare to come by. When it comes to vertical spread, you need to make sure you know exactly what volatility means, because when it comes to vertical spreads, volatility is the main thing to make money using vertical spread, because we want that decay to decay as fast as you can so you can close the trade and move on. But in a nutshell, this is how you open a vertical credit spread, for those of you that have asked me before. All right, guys, thank you very much. I hope it has added some value to you. All the best, stay safe, and happy investing.